Welcome back to Market Day Report. I'm Chris Swift. We've had a little time opening now, and the markets have changed quite a bit since we have last seen. So let's go back to our corn board this morning and see what corn is doing. And corn is adding a little bit more premium to it. I've got the September contract up 472.5 with 473 3/4 the high tick. December corn now up 4 at 485.5, and March up 3.5, 499 even. Our soybean market had been the shining star this morning and is still a little bit higher, but not quite as high as what it has been. September up 5 1/4 at 1340. November beans up 6 1/2 at 1330, and out into March beans 1345 1/4 up 7 1/4. And Chicago wheat coming up still kind of softer on the day. September down 6 1/2 at 591 1/4. December wheat down 6 at 617 even. And out into the March time frame, 642 1/2, down 5 3/4. And the Kansas City hard red winter wheat still softer as well, down 6 3/4 September at 736 1/4. December down 7 at 745 1/2. And we'll wrap it up with spring wheat this morning. And spring wheat still a little bit softer, with the September down 4 at 787 even. December down 3 1/4 at 803. I'd like to invite my guest in this morning, Ted Seifried. He is with Zaner Hedging this morning, Zaner Ag Hedge. Ted, certainly do appreciate you being on here. I know you're fixing to go on a big crop tour there. Is there anything, Tim has showed us all this really dry weather, hot weather coming in. Do you expect to see much changes from this weather here, or is everything pretty much set and just needing a little time to finish out?
You know, Chris, that's a great question. I was just sitting here moments ago looking at the newest drought monitor and comparing the routes that both the western and the eastern legs are going to be taking, and kind of laying those over that drought monitor, trying to figure out, okay, what's going to be good, what's going to be bad, what my expectations are for this tour, and also kind of comparing it to what we saw last year. I was on the west last year. I'm going east this year for the first time in like 8 years. I think there's a lot of areas of interest. I'm very, very curious, and part of the reason why I'm going east, I'm very curious about central Illinois into eastern Iowa. These are areas that have been showing up on the drought monitor for a while and still are. You also had that sort of 10-day period of time where we had warm and dry temperatures right during pollination. So I think we're going to see some really good crops that look really pretty good from the road. Now the question is going to be, what does the grain look like when we get into the field for corn? And for soybeans, soybeans, it really doesn't matter what the weather was like in June or July. It's really all about the weather in August. And I got to say, Chris, this is one of the better Augusts, or at least starts to August, first halves of August, that I've seen in really my career, my almost 20-year career. So I think my expectations are that we're going to see a lot of soybean potential. And then for corn, I really don't know. I want to lean towards the idea that, this was a tough year. It's not a perfect crop, but for the most part, we're going to see a corn crop out there. But I honestly don't really know. That's why we do these things, Chris. And it should be interesting. And for the western route, certainly the big question mark is what happens day 2 through Nebraska. That was a really, really tough route last year. It doesn't look like it's going to be significantly better this year, but it should be a little bit better. And then, the last part of the western leg, when it gets into southern Minnesota, that's the other big question mark for me on the western tour. So, yeah, lots of question marks. I can't remember a year. Well, actually, I can. 2019 was the last time that I was going into this really very uncertain about what I was going to see, specifically on the corn side of things. And that was because of the very, very delayed planting that we had, and the very roller coaster ride in crop conditions that we took in that year, too. Sure. So it should be a very interesting week. We'll have a lot to talk about, and I'll be giving you guys updates daily.
That's great. That's great. We'll be looking forward to that. I got another question for you, but we got to take a commercial break for just a second. I'll be right back with Ted Seifried out of Chicago. Hang on tight with us, guys. We'll be right back. Welcome back to Market Day Report. I'm Chris Swift. We've seen the cattle market a little bit softer this morning. Let's take a look at it now and see if it's done anything different, and still pretty soft. I got the August contract down 82, 177.95. October fats down 90 at 178.37. And the December contract down 97 at 182.60. In the feeder cattle market, they've been softer, and they are still softer. Down $1.35 in the August at 244.02. That's pretty close into line with the feeder cattle index. September losing $2 worth of premium at 247 even, and October down 202 at 248.95. Our hog market had been higher this morning and is still higher. October hogs up 167 at 79.85. December up 135 at 72.52, and out into next year, Feb hogs 76.85 up 127. I'd like to invite my guest back, Ted Seifried from Zaner Ag Hedge. And Ted, I got one question back on the grains real quick, and we saw that we know that the yield is going to be crucial, but we had 2 million acres less of soybeans planted and 4 million acres more of corn planted. How does that fit into the situation?
Yeah, flip those numbers, Chris. We had 4 million acres less of soybeans than what we intended. That's the real big one. And that's what's kept soybeans really propped up much closer to the highs, the recent highs, than what corn has done, making new recent lows. So it gives you a much bigger cushion for the corn crop. The other problem that we have with corn is that demand's been less than ideal. So we have a cushion. We can lose a little bit more off the field. We can get down to the low 170s before we really start to drop below that 2 billion bushel carryover for corn. So for me, if we come up with a corn yield, if I'm out there looking at things saying, yeah, this is a little bit worse than what the USDA is saying, but it's not a complete catastrophe, that's not terribly bullish for corn.
Okay.
Soybean, there is no room for error because of that loss of the 4 million acres. If we're coming in with a yield lower than the USDA, or it's looking like the pod count's just not there, oh boy, that's a big, big bullish thing for the soybeans. However, I think it's really going to go the other way. I think, again, this is why we do these things. Who knows? But my expectations for what I'm going to see are that the soybeans are going to look really, really good and have a whole lot of potential, and potentially see that yield swing back the other way after the USDA just lowered at 1.1 bushel an acre. I'm wondering if they're going to have to go back to that 52 national average yield, or possibly above. But again, I haven't seen it yet. That's just what my thoughts are pre-tour.
Oh, Ted, well, I'm sure looking forward to it. I can't wait till next week to start hearing some information from out there in the field. I know that's really going to help our livestock producers, because while corn is kind of low here, if there is aspect of it going to be a pretty good crop, it might change our hedging ideas on how we're going to approach our feed needs going forward. So, Ted, certainly do appreciate you taking the time. Ted Seifried with Zaner Ag Hedge. So certainly do appreciate that, just taking the time to do that. And Suzanne, one more time to you.
Thank you so much, Chris. And looking forward to those reports from out in the field.
I am too.
I like to say that Ted is outstanding in the field.
Absolutely. We really need those. So
yes, thank you so much, Chris.